In this video, we will be breaking down ICT strategy and simplifying it. And we could use this strategy without daily bias. So let's begin. So what we want to be in a 15 minutes time frame or any higher time frame works too. For this example, we will be on the 15 minutes time frame. First, we look for a break of high or low, which is a liquidity grab. You need to see retracement back down below and not close above the liquidity level. As you can see here, the candle did not close above this high level. So we will be dropping down to the 1 minute time frame to look for a setup. One key tip is that when you break high on the 15, you will be looking for a break low on the 1 minute time frame. If there is a break low on the 15 minutes, you'll be looking for a break high on the 1 minute. That you are looking for break of structure. We are now on the 1 minute time frame. See here, we did break low here. So now after the break of low, we are looking for a retracement back into the zone. We'll be marking out the levels with the Fibonacci retracement from the top to the bottom of where the market started retracing back into a zone. You will be taking an entry, a short entry above the fair value gap right here. And our take profits would be at this level, or the next low works as well. You could target either one's fine. Take profit one is hit. Bit of time, but eventually we hit take profit number 2. Let me show you another example of when the sell side liquidity level is taken on the higher time frame. For this second example, we will be on the higher time frame as well, but instead of looking for the highs being taken, we will be looking for the lows or the sell side liquidity level being taken. As you can see, I marked out the lows here if the market would retrace back or continue lower. As the level or the sell side liquidity level was hit, the market retraces back above this level. So now we could go down to the 1 minute time frame and look for a setup structure of high on the 1 minute time frame. And now on the 1 minute time frame, you will be looking for a break of structure of right here. And as soon as it hits the high and the market retraces back down, you will be drawing a Fibonacci level from here to all the way up here before the market starts retracing. And what entry could we do in this scenario? We could use the fair value gap here. Alongside with the order block. And take an entry from there. You could go long here and have our stops below the order block. And where could we target? First, we could target this the level before it started retracing, the next high after that, and eventually here. So these are our take profits. Each one of our take profits will be at a previous high level, because each of these levels have stops above it, so the price will be reactive. Once it hits these level, it has a reaction of the market switching bias. So let's play it out. Eventually it hits take profit. Let's go over a recap of what we just learned today. So first, we will be on the higher time frame, such as the 15 minutes. We will be looking for break of high or break of low. After the break of high or break of low, we will want to see the candle close below the level. And then we will be dropping down to the 1 minute time frame. If it's a break of high on the 15 minutes, then we will be looking for a break of structure of the low. If it's break of low on the 15 minutes time frame, we will be looking for a break of structure of the high on the 1 minute time frame. Then we will be drawing the Fibonacci level after the break of structure, and the markets are retracing back into the zone. And we will be taking an entry anything below 50% with other ICT concept to take an entry. Just remember, if it doesn't hit the below the 50% level with other ICT concept, you should not be taking an entry. You will only be taking an entry when there is setup in the market for you to take an entry. Sometimes you will get stopped out, sometimes you will not, but that's just the way of trading. Take the risk, reap the reward.